All right, everybody, welcome. For those of you that don't know, my name is Anthony Carpino, and I'm excited to share with you my journey as an individual investor. On this channel, I'll be tracking my stock portfolio, which you guys can see on your screen right now. I'll be sharing my dividend income. I'll be discussing my buys and sells so you guys can keep track of exactly what my trades look like. And I'll also be providing in-depth analysis on the companies that I am invested in. Whether you're a seasoned investor or just starting out, I hope you'll find value in my content and that it will help you make informed investment decisions. With that being said, I am not a financial advisor, so please take what I say with a grain of salt and make your own informed decisions. The overall goal of this After Hours channel is to highlight what investing really looks like. So as you guys can see on your screen right now, it's a bad day to be in the market. Portfolio is almost down 3% today, which is roughly, what are we at? $3,200. For somebody that's not used to seeing this, that may be quite frightening and disheartening. For me, on the other hand, I look at it as an opportunity and a normal fluctuation in the market. To start this series off, the road to 1 million, I want to show you guys what I've been buying over the last month to 2 months. I want to show you the dividends that I've received, and I want to show you exactly how this portfolio has performed over the last year in comparison to the S&P 500. Additionally, we'll be taking a quick look at the financials of one of the stocks that I've been buying recently so you guys have a better understanding of where I am putting my money and why. All right, let's kick this thing off. So as I mentioned earlier, the portfolio is sitting around $106,000. Portfolio is down like 3% today, which is quite a bit more than usual, but that's because of two different holdings. As you guys can see over here on the side, Apple, Microsoft are down the most today in my portfolio. And if I take a look at my Microsoft holding, it's my largest position by far. Current market value of this position, $23,000, almost $24,000. As for Apple, this again is another large holding of mine, sitting at $16,000 or 15% of my portfolio. Now going back to the portfolio, I want to take a look at something real quick because you guys may be looking at this large decrease today and you're down $3,000. Clearly you don't know what you're talking about, but I want to highlight something for you guys real quick. So we're going to click on the year to date. This portfolio is down roughly 15%. You can see it at the top here. Let's compare that number with the S&P 500 year to date. The S&P 500 is down 21%. Compare my 15% to 21%, and I like to think I'm doing pretty well. This dividend portfolio is very resilient, has low volatility, and as you can see, it's beating one of the benchmarks, if not the only benchmark for the stock market. I bring this up to show you guys that the market is going to fluctuate. You have to get your emotions right, and you have to be willing to suffer some of the downturns in order to reap the rewards of the bull markets. Taking a look at the 1 year view, you guys can see portfolios down almost $17,000 or 13.5%. Similar to the S&P 500, there's been quite a few dips in the market that have really just been beating this portfolio up. Before we move on to the recent buys and sells, you guys can take a look right over here. These are all the companies in my portfolio. Feel free to pause it, take a look at this, but if you're interested in any specific company that's on this list or in my portfolio, feel free to leave a comment down below and we'll actually dive into that company more in depth later in the future. But as of right now, we'll be moving on to the buys and sells. Taking a look at my orders over the last month, you're going to see that I bought 13 shares of SCHD. SCHD is essentially a Schwab ETF that is a large dividend payer and has very low volatility. I use this as a holding to essentially offset the volatility of my portfolio. November 28th, started a position in Berkshire Hathaway. While this company does not pay a dividend, I really wanted to add it to my portfolio. I felt like I was missing out on a lot of potential, and I put my dividend mindset aside and eventually bought into it. If you guys look down right here, you can see I started my position at $313. And as we continue up in these orders, you'll see that I've been dollar cost averaging in over the last month. Next on the list Union Pacific. Union Pacific is actually a previous holding of mine. It was actually my best performing stock in my portfolio for over a year, until I felt like it was a little bit overvalued and I sold out of the company and put that money into another asset that I felt had a better likelihood of outperforming the broader market. You guys can see right here down at the bottom, November 28th, started my position, 6 shares into Union Pacific at $209. In my opinion, I still think that this company is undervalued. So if you're interested, go take a look. Next buys on the list are, not surprising, I bought into, you can see right here, SCHG. This is another Schwab ETF, but it focuses on more of large cap growth stocks. It's down pretty bad over the year, so I figured I would DCA in. December 1st, you guys can see that I got 3 shares at roughly $60. Now, picking things up a little bit, you guys can see, bought Berkshire Hathaway again December 1st. I got 1 share. I believe this was a dividend payment that came in, so I just put it right back into the company. That same day, also bought more Union Pacific for $219. On December 2nd, you guys can see that I sold JP Morgan Chase. This company, in my opinion, is a little bit overvalued, if not at its fair value right now. So I decided to sell half of my position and put that towards Berkshire Hathaway, Union Pacific, and as you guys can see above this, Apple. From this trade, I was able to make a few different buys. I got 7 shares, or almost 8 shares of Apple at $146. I got another 3.5 shares of Berkshire Hathaway trying to build my position up. Recently, you guys can see that I added to my position in Union Pacific, got roughly half a share at $212, and then I bought another full share of $221 from a dividend payment that I received. If you guys have any questions about these trades, feel free to leave your comments down below and I will get to them. Without further ado, I'll be moving on to the dividends I received within the same time frame. All right, recent dividends, they were pretty good. If you can see right here in the middle of your screen, these are all the dividend payments that I've received since November 25th. Starting off first, we got $58 from Starbucks, another $36 from JP Morgan, $67 from Microsoft, which is a very low paying dividend stock, but when you have such a large position in it, you get a sizable dividend. One of the largest dividends that I've received in recent times, and that is coming from Schwab's ETF, SCHD, and that came in at $204, which I was able to reinvest into the companies I just previously showed you guys. In addition, SCHG, which is Schwab's large cap growth ETF, paid $16.02. And lastly, I got Vanguard's Financials ETF, pay me roughly $19. Take a quick side tangent and you can see all the dividends that I've received in recent times. Feel free to pause your screen if something interests you, but I just want to give you guys a realistic expectation of what growing a dividend portfolio looks like. To end this series, Road to 1 Million, we'll be taking a look at one of my recent buys into none other than Union Pacific. This will be a very quick overview of essentially the financials of the company, but I just want to highlight a few things. So we're in annual right now. Let's take a look at the revenue of Union Pacific since 1985. You can see that in the last year, they grew their revenue by almost 12%. Switching gears a little bit, take a look at the EBITDA. EBITDA looks fantastic. I'm extremely happy with this. In the last year, they grew their EBITDA by almost 15%. Almost $12 billion. One component of financials that I advise everybody to take a look at, and that is right here, free cash flow. As you guys can see, free cash flow did not look too good when this company was first starting off, but since roughly 2007, 2008, they have continued to increase it over the years. In 2021, their free cash flow was $6.1 billion. Another thing I definitely like to look at, and I advise you guys do the same, is stock-based compensation of their employees. You see how there's no other graph? You can see kind of right here, stock-based compensation, but that's what they pay their executives. Union Pacific does not pay their executives extensive stock-based compensation like most tech companies. That's another reason I truly love this company, and it's continued to beat the market over 20 years. Switching gears, I'm going to take a look at the dividend. Obviously, I mentioned this is a dividend portfolio, And over the last year, they grew their dividend by 10.7%. Over the last 10 years, they managed to grow their dividend by nearly 14%. Last but not least, in this quick dive, I want to take a look at their shares outstanding. You notice something here? Their share count since 2005 has consistently gone down. That is exactly what you want to see when you are investing in any company. Now, there's a few exceptions, but for the most part, this is what you want to see. In the last 10 years, they were able to decrease their share count by nearly 4% per year. You may be wondering how a company does this, and this is share buybacks. If you're not familiar with what share buybacks are, it's essentially the company buying back their own shares. This in return decreases the number of shares, so it makes your shares worth more money, and in return increases the price of the stock. If there's anything in this video that you have questions about, you want me to go more in depth with, or you'd like to see more analysis on some of the companies I own, like Microsoft, Apple, or maybe one of the stocks that you own, feel free to leave a comment down below. With that being said, I hope you guys have a good Christmas, depending on when you're watching this, and a good New Year's as well. Take care.